Hi everybody, Dana Sparks, broker of Maximum One Greater Atlanta Realtors. And today's contract tip is more about the financing contingency exhibits in your purchase and sale agreements. So this one has to do with a buyer terminating within the financing contingency and the loan denial letter. So if the parties are binding with the GAR contracts, then in the GAR contract loan contingency exhibits under paragraph 5, where it talks about financing contingency, it does say that the buyer has X number of days, and that time frame is negotiated between the buyer and the seller. The time frame, the number of days from the binding agreement date that the buyer has to terminate and be protected under the financing contingency exhibit. So for example, if you put 21 days, 28 days, what that is saying is the seller gives the buyer 21 days or however many days to convince a lender to lend them the money to purchase the home. They only have that number of days to be able to terminate the contract and be protected and get their earnest money back. But so they have to do two things. They have to terminate the contract and they have to prove it. So they prove it with the loan denial letter. So in the GAR purchase and sale agreements under paragraph 5, it says the buyer has X number of days from binding agreement date to determine if the buyer has the ability to obtain the loan described above. The buyer shall be deemed to have the ability unless prior to that time frame the buyer A notifies the seller that the buyer is terminating the agreement because the buyer has been turned down for the loan, and B, this is the proving part, the buyer provides the seller within 7 days from the date of the notice of the termination a letter of loan denial from the mortgage lender. Now, in the RE forms purchase and sale agreement, it is the same concept. The seller grants the buyer X number of days from binding agreement date to determine if a lender is going to lend them the money to purchase the home. If not, a buyer must terminate within that time frame and they must prove it with a loan denial letter. But the timing of that loan denial letter is different in the RE forms contract. So this is all described in the standard terms, and under paragraph 6.3 in the RE forms, it does say this contingency shall be granted by the seller if the box is selected. And it says, subject to any expiration of the date expressed in writing in the contract, the financing contingency is defined as the seller's granting to the buyer the right to terminate the contract in the event the buyer is unable to procure financing under the terms. Then it says, if the buyer does choose to terminate the contract based on the inability to obtain the financing as described hereunder, the buyer must give the seller written notice of the termination along with a written statement from the buyer's lender indicating the reason for the lender's denial of the loan approval. So again, the buyer has that negotiated time frame to terminate the contract, and they must prove it with a loan denial letter. Binding under the GAR contracts, the buyer has that negotiated time frame to actually terminate the contract, and then 7 days thereafter to send the seller the loan denial letter. In the RE forms contract, the buyer must terminate within that time frame negotiated and send the loan denial letter simultaneous with that termination. So if you are a listing agent and you get a TNR from a buyer and the reason is financing contingency, but you don't yet have that loan denial letter, if the seller wants to agree to give the buyer their earnest money back, they're more than welcome to sign it. If the seller does not, then you listing agents and sellers, y'all may want to hold off signing that agreement to release the earnest money back to the buyer because they've only met part of the contingency. They still have 7 days after you receive the termination to provide you with that loan denial letter. So buyers and sellers, you need to be cognizant of that different time frame in the GAR loan contingency exhibits. Now, there's more about what the contracts specify, what must be or cannot be in that loan denial letter, and we'll talk about that in a later video. Thank you guys so much for watching. Dana Sparks, Broker of Maximum on Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.